All right. Good evening, everybody. What's up? What's up? Welcome to our stock market Q&A. We're going to be going over pretty much all of your guys' questions. So those of you just tuning in for the first time, my name is Garrett. I am one of the owners and operators of PotterStocks Investments. So if you guys have any questions regarding the stock market, trading, anything like that, be sure to ask. There are no dumb questions here. I'm going to go ahead and alert everybody that we are live now. All right. Good evening, good evening, good evening. And we'll talk about that in just a second. Gold news. We're gonna discuss further. All right. Live. All right, we're good to go there. What's up, guys? Of course, Robert. Yeah, happy to do it, man. I'm happy to, for those of you guys willing to put in the time, I'm willing to give it to you, so. Yeah, of course. Just a live Q&A, guys. We're going to be going over whatever questions you may have as far as the stock market is concerned. And I will be writing all of these down and taking note. Because I want to know what you guys need to know. That way I can help people in the future and hopefully refer them a little bit to this. So, all right. Also, shout out to our good friend Sushi in the chat. This pin's all the way from Japan. It's weird because it says Savannah Claw, which is where I live, but appreciate you, Sushi. All right. And those of you guys in the Discord, you guys are always welcome to talk in the live trading chat. I got this, so. All right. Good evening, everybody. Good evening, good evening. Pulling the trigger. What are some scanner filters on average? Okay. What's up? Alright, I'm going to go ahead and give Atlas a ring here. Alright, just a second. How can you find those? Alright, so I'm going to go ahead and start writing a lot of these questions down. I'm already getting some really good questions here. I am in swing equity. I have some long-term positions, and I'm trying to get into options. My issue is pulling the trigger. When did you feel comfortable pulling the trigger and learning to mitigate risk? And learning to mitigate risk? It's a great question. For questions, either one, Daniel. Not a big deal. You can do it in the live trading chat. You can do it on here. We'll keep track of those. So, all right. I think everybody's on live. You have to excuse. I got the kiddos My daughter took a little bit of medicine, so you can tell she is feeling better. All right. So let's go ahead. Do you like to take? All right, we got plenty of questions already pouring in, so I'm going to go ahead and get to some answers on these questions. Those of you guys tuning in on TikTok, we are live on YouTube at the moment. All right, so let's get into it. Let me go ahead and turn this down just a little bit. There we go, perfect. All right. Okay, so let's go ahead and full screen. And so the first question we have here, and I'm going to go ahead and repeat it for those of you. I'm going to highlight this in this message. So I am in I swing equity, and I have long-term positions. I'm trying to get in two options. My issue is pulling the trigger. When did you feel comfortable pulling the trigger and learning to mitigate risk? So that is an awesome question. So as far as learning to pull the trigger, right? So this has everything to do, and has a lot to do with the company, right? So good sound companies like Microsoft, obviously I don't have a problem pulling the trigger on a support bounce or something like that, right? Because I know that they're fundamentally sound companies, and for swing trading, you know, if the chance is given to go up, it will. So as far as pulling the trigger, for the most part, one of the things that gives me confidence is my knowledge and confidence in taking positions with expirations that are suited to my position, right? So specifically what I mean by that is if I decide that, let's say right around here, okay, we'll just use this as an example. And let's see. So we're going to go off of this would have been Microsoft's previous high, correct? So let's say we were looking to take, and we have this channel, right? So we have this channel established. We have our projected, and I guess, I don't know, I think the whole way up here, my price target of 305, you guys can quote me, those of you guys in YouTube, you guys are on the Discord, you guys can quote. I definitely was pretty strong, opinionated as far as my price target for Microsoft, and that was really, really far down. That was down in the 260s, 280s. And the reason why I had that price target, right, is because I knew where obviously I have confidence in my standard deviation channel, right? And this is one of the best swing trading. If you don't use the standard deviation channel for swing trading, it can be really hard to see longer term trends. And so as long as I have a good indication, and so I think this is worth writing down. So a good daily setup is key, and that has obviously case by case. You can have a support bounce off of a daily channel like this. So a good daily setup, and i.e., you know, something along the lines of a falling wedge, right? A good reversal pattern. Let's see, so falling wedge. A standard deviation channel, right, is by far my number one swing trading. So specifically for your question, one of the reasons why I felt so confident in taking Microsoft is because it stayed and respected the channel that I had drawn, and that has been drawn for quite some time. And so once I saw and recognized that we had that bounce coming, I saw the volume, I knew that we also had, so here's the, and I know I'm trying not to go off the rails here, because here's the thing. Each individual setup is going to have its own prerequisites, right? So if you're looking at Rocket, or you're looking at something that still has a future ahead of it, but its fundamentals may not be where we want them to be right now, its trend is sloppy, it doesn't look great, right? That's going to be a little bit different than something like Microsoft or Apple or even Tesla. Those type of swing tradings are easier to identify long-term trends, whereas things like Rocket tend to chop around. They get caught up with retail trying to squeeze it. It's a whole mess. So as far as swing trading, on just my basic swing trading. I can't say it tonight. Swing trading strategy would be a standard deviation channel is one of my number one indicators. Some type of catalyst in the future, right? So a earnings coming ahead or a earnings that has already passed, and we didn't make any moves. And that's, I think, exactly a great example here on Microsoft. You can see that when we do hit earnings, we do fall. We end up hitting that support, but we don't go down. And you also could have used quantitative data, right? And you could have gone and looked at what stocks were being purchased at these levels. And that's a good indication often. I use Quiver Quantitative to identify those. And I see you guys are how do you read a standard deviation channel? I will get into those. Oof, there's a lot of questions coming in. We're gonna get to them. All right. Just want to make sure I'm not missing anything that I've been talking about. Just want to make sure I'm answered. Great questions. Okay. So as far as the actual trigger being pulled, right? Momentum after some type of catalyst. Earnings, right? So we have earnings here. That picks up the volume, and the volume starts to kind of stay consistent. But mostly, whenever we stop going down and start bouncing, and you start to see that accumulation, when I see the stock starting to go break into new highs, and like I said, it can be case by case, but when I see or identify a great trend or potential, right? So here on Microsoft, I knew that Nancy Pelosi, right, had bought a ass ton, excuse my language, of Microsoft, right? And I knew that we had a gap to fill. I knew that at a minimum we would see 260, correct? 260 and a stab at that previous high. And I made a couple of videos on that. Now, for me, I can go look at flow, I can go look at block trades, and I can go look at my standard deviation channel as three different things to go lean on, right, for a potential swing trade. And of course, I need to have some type of momentum. So whether that have been the Qs moving to the upside, right? And one thing, and I'm using Microsoft as an example, but I'm gonna go ahead and move to another stock and use that as an example as well to give you two different outlooks, right? So this is Microsoft, $300 price target. We knew, and try not to confuse you guys who are new, but part of the standard deviation channel, which I'm going to reiterate is my favorite swing trading indicator. If the stock respects it, right, and I find that and for those of you who are on TOS, that's in your indicators pre-built. It will actually line up automatically for you. But one thing that I want you to notice, that was another reason why I pulled the trigger on the Qs. Link is in the bio, by the way, if you guys are curious to see the chart and what I'm actually talking about. So as far as the daily or the Qs, right, we knew that we had, oops, it's going to be a little bit jacked up, but there we go. So look at the similarities, right? This is the Qs, and this is Microsoft, right? So both inside of the standard deviation channel, both holding long-term trends. Microsoft, if you go and notice the moves here, right, it's a lot choppier than Microsoft. Microsoft held a what is called relative strength, right? So where the Qs pulled back and we saw a lot of stocks pull back with it, Microsoft held onto that standard deviation channel. So relative strength is a great thing to look for, but those key, the standard deviation channel, some type of momentum in the future or behind us that we've passed and we didn't fall. Those are things that I look for as far as a swing trade or as far as pulling the trigger on a swing trade. And one thing that also, and I'll end it with this, is whenever I'm deciding to take a swing trade, right? So even if it's just an overnight, and I'm specifically speaking on longer term trends, right? So like Alacola, for example, I called this. So down in the $13 range was the first time that we took a position on Alacola. I actually had somebody come into our chat, and he was one of those people who learned what he wanted to learn and he left, right? Which is exactly the point. That's what I was like, okay. And we have people like that are tuned in right now, might be tuned in on YouTube as we speak, who learned what they wanted to learn and they've moved on. And that's the whole point. But with Alacola, he came in and asked me what I was watching for a good long-term swing, something leap-wise that was good for in a small account. And Alacola was what I was watching, because not only had Alacola gone through 3 different earnings, having not that bad of earnings, the only thing, the FUD that it was holding, right? And this is why I say it's case by case, but the FUD that it was holding was that there was a protest at some of its smelting factories, correct? So whenever I saw that news, I knew that it would keep the stock down. But aluminum, infrastructure, the price of metals in general was going up. So as soon as I knew that we had a catalyst, right, which was earnings, I waited for the stock to go down on earnings. It did not go down. It went up, and then it pulled back, and it kept going up. And then so what I looked for on Alacola, right, is and I would write this down, is a EMA crossover. So an EMA crossover on the daily with good volume, right? Now, with something like Alacola, it's a smaller stock, so it's not going to move as parabolically as some of the other stocks you may know. But it will accumulate good volume. And so either that or it will use its supply zone, right, in order to kind of propel it into that next level. So what you see here is, and I mentioned this to Atlas, right? So Atlas asked me the other day, like, how do you, like, I know that there's certain things you look for, but like, is there something like with the EMAs, like specifically that you're looking for? And I told him that when a stock accumulates under a major resistance, right, or a major, like whether it be the 200-day EMA or something like that, and it continues to accumulate and kind of consolidate underneath that, what I look for is those EMAs to hold a tight range. So you can see that the 9, the 20, the 50, and the 20 are all within a 25 to 50 cent range, right? These are daily moving averages that are usually pretty spread out, right? You get them extremely consolidated. So consolidated EMAs for an EMA crossover to the upside is one of those things that I look for. And when I see that, it gives me confidence to know that if that EMA crossover plays out, that I can take that trade to the upside, and that gives me confidence. So when I see high probability setups that go along with the climate that we are in, right? So whether that be tech writing or infrastructure news, that's the type of thing that's going to give me confidence to enter a trade. High probability setups, high volume, some type of catalyst, because that's it. It's almost like one of those, like, bargain markets. You don't think of it until you see it, and then you want to buy it. Like, you'll have earnings come up, and then it'll remind you, and retail runs to it, and yeah, you end up starting to see momentum. Some type of catalyst, of course. Okay, so hopefully that was kind of a long explanation, but those are some of the things that give me that confidence. And I mean, at some point, it's just worth it just to dip your toes in, right? Even if it's for just a quick overnight swing, right? So Sony, which we didn't win every trade on Sony, but most of the trades that I've ever taken on Sony, when I found it in trend, ended up doing rather well. And so, like, for short-term swings on Sony, it just goes down to fundamentals, right? So even just seeing Sony bounce off of its daily support, I knew that it at least had a shot at taking a stab at resistance. So, and one of the reasons that I had confidence in that overnight swing was because I know, one, that most of the movement that happens on Sony happens in post-market and in pre-market. So I knew that it's going to be one of those things where I can take the trade, and take profit the next day. So, okay, so
I think one thing you should mention, Garrett, about Sony in particular, because a lot of people would probably look at the chart and be a little confused. Garrett doesn't necessarily mean that like there's a ton of volume happening in after hours or in free market on Sony, but essentially the market makers are moving the bid or the ask far enough to where it's gapping up or gapping down on the daily. But in pre-market, you're going to see kind of like 2 or 3 ticks because typically Sony doesn't have a ton of price action, but the market makers are moving it in one direction or the other without it having a ton of price.
Oh, sorry.
Without it having a ton of price action in those after hours or pre-market sessions.
That's a good point there. And I think it's one of those stocks too that's heavily institutional owned. So when it wants to be moved or when they feel it needs to be moved, it's moved. So yeah, I agree very much so.
100% there, man. I mean, they'll move it when they want to.
Yep, exactly.
That's the name of the game.
Yep, it is. I forgot that I left the call up, so you kind of scared the shit out of me. So.
That's funny.
So I don't want to linger too much on this question, but it is a loaded question because what gives me confidence is doing my due diligence. That's the number one thing. Is when I do my due diligence and I see setups, and you guys can see it. I get stoked. Like, I get pretty amped up when I find a good setup, right? Because I'm like, okay, like, that's something that, one, I recognize. Two, I've seen either one before, or I can see the momentum. I can see the continuation. It has a catalyst, whatever the case may be. That's the type of thing that gets me, amped up. And when I see, once I see a good setup, right, I set a certain obstacle course or prerequisites for it to meet, right? It needs to, like I said, have a catalyst. It needs to have I like to, I know this is kind of not as important for some people, but for me, I like to see some sort of bullish moving average, whether it be the 9-day moving average or the 20-day EMA, relatively close to the price action on that higher time frame. And that'll give me an indication that it's not going to have some type of drastic retest and catch me off guard. So with that being said, once I set these prerequisites, and a lot of times these prerequisites will change case by case, and that's one of the things about just time in the market, right? Like, there are a multitude of different things, and I could say, like, on a blank sheet of paper, like, here's 4 or 5 things that I look for, but it may change when I see some type of trend, right? Like, if I see Plug did not have a daily channel trend. And if you guys hear my daughter, by the way, she is totally okay. Those are normal child sounds. She's going bananas out there. I can hear her over my headphones, so I know you guys probably can. But anyway, so once I set those prerequisites and I know what I need to see in order for that stock to break a downtrend or bottom out or bounce, whatever it is I need to see, when those prerequisites are met, that it's not even necessarily confidence, it's robotic. It's like, okay, prerequisites met, enter trade, like, it's just like, I see it, enter, and obviously that's where the user part of it comes in. Can we enter on time on a breakout, or can we enter, as it pulls back towards the end of the day, because we're looking for that bounce, but it might happen in after hours. So like I said, it's going to be case by case, but you can iron out some steady prerequisites. So, all right, I won't take as long as the next questions, but I just wanted to really kind of dig into that one because it was just kind of there's a lot in there. Okay, so do I have a strategy for swing trading indicators, EMA time, monthly, weekly, hourly. How do you go about swing trading specifically, and does it change depending on the stock? I think I just answered like about 25% of that question, but just to reiterate myself, I think that some solid indicators, of course, for swing trading, some of my favorite are going to be that standard deviation channel. And like I said, a lot of the times you may only see a deviation channel form on an hourly, or it may not even look good if it's and TOS does it automatically. I've yet to find a standard deviation channel that's, if anybody writes scripts or knows somebody who does, hit me up, because I'd love to go ahead and have that. I just don't have time for that. But a standard deviation channel, EMA crossovers, the 20, the 50, and the 200. And for those of you who don't know, what is an EMA, or what is a moving average period? It's exactly what it sounds like. It's a moving average. So it's an average of that closing price, over X amount of days, right? So a 9-day moving average is just the average of that stock over the last 9 days, correct? So, and that goes up or down. So, 1 second. Oh my god, dude, my daughter. Can you guys hear her? Oh, I hope not.
One thing that I'll hit on real quick is you were talking about EMAs, and just so everybody's aware, right? So, right there, you have EMAs and you have, or some people call them SMAs. So it's whatever your preference is. But when I'm referring to SMA or MA, I'm referring to a simple moving average or a moving average are the same. Some people sometimes confuse those with SMA as in smooth moving average,
right,
which I don't use those, not a fan. The difference between exponential and a regular moving average, so a simple moving average, is that exponential applies more weight to the most recent candles. So if you're on the 5-minute time frame and you're looking at the 9 EMA, that actual line that is the indicator, the 9 EMA, is taking 9 candles, so 9 5-minute candles, and it's applying a weight distributed across the 9 candles. The most recent candle has the highest weight, and then the second most recent candle has the second highest weight, and you keep going down until the very last candle has the least weight. What the weighting does is it allows the indicator to say, hey, I want the weight or the price, I want the price of the last candle to matter more than the price of the first candle within these 9 candles, okay? Whereas a simple moving average takes all 9. So if you were to look at a 9 simple moving average, it would, in whatever time frame, right? It could be the 5, it could be the hourly, it could be the daily, the weekly. It's gonna take 9 weeks, 9 days, 9 5-minute candles, whatever, right? So it's going to take those and it's going to evenly count the average across those candles. It's not going to favor one more than the other because it's not a weighted average, whereas the exponential is a weighted average.
Nice. And one thing I think I've had people ask me before I leave it out, the HMA or the whole moving average. Oh my god, I hate when this trading view does this sometimes. It just skews me. Watch, I mean, I think you'll see it happen. Yeah, if you look at my stream on YouTube, you'll notice the lines just go berserk. But the HMA is, just to simplify it, is a much smoother and more fluid and reactive moving average. And for me, I like to use that 500 HMA. This one was, I don't even remember who was the first person. I think Plunger showed me that one. I'm not quite too sure, but the 500 HMA is one of those things where a lot of the times it'll just be floating off in its own like space, like just completely out of the price action, like on its own. And when it comes around, it's to be respected. And that's just the way that I use the 500 HMA. Is if you cross above it and you end up having moving averages move over, that's when you start to see some really significant movement. So Tesla.
Yeah, and the thing with the whole moving average, and a lot of people get this, they get it confused. It's the way it's calculated is using the open and the close price, and the difference between those two, and it gives you the average across the candles whatever time frame, right? If you're doing the 9, it's 9 candles at 5 minutes, or if you're doing the 500 HMA, that's 500 candles at a 5-minute time frame, or hourly time frame, whatever, right?
Mm-hmm.
It's calculating the close and the open price, and then using the difference as the average, and that's how it works. So it's slightly different than, it's not just looking at the close price. It's looking at what the open is, what the close is, and then that difference is used in the calculation of the average.
Nice. All right. Just for time. So obviously, just to wrap that question up, as far as time frames, I think when you're looking, and I'm starting with like swing trading, right? When I think of swing trading, I don't really think of like just an overnight swing. For me, I usually think of like a 3 to 4 day swing, right? And the way that we, like, if you're looking to just take a position overnight and take profit on it, okay, totally great. But if you're looking to take a position, right, and you see momentum like Microsoft, like that type of run, you take positions, right? And this is where I think the question of confidence comes in. If you see it and it meets your prerequisites, there's nothing left else to do. Pull the trigger. And what you do is you make sure that you have stop losses, protection in place. You know where you're going to cut. You know that it's okay if you take that loss because it's not a lot of your account, because you did use proper risk management, right? And so not only that, if it did end up showing some type of reversal signs, if you're out long and you're protected from, with theta, which you should be taking any type of, not any type, but for the most part, most type swing trades, right? That are multi-day or whatever the case may be. That's where if you're able to take a position and go out like next week, you can use weeklies underneath to maximize your position or add to your position as if you were scalping it, right? So you know that you have your underlying position, and that gives you confidence to take profit on your position because you're still in the trade. I can't tell you that when this market finally sees some type of reversal in the bottom, it's going to be one of the best opportunities for you all to start buying fundamentally sound companies and utilizing option leaps, option weeklies to hedge long-term positions in companies that we know are going to be a big part of our future and are fundamentally sound companies going into the future as far as innovation and adapting to the times. I think PayPal is a great example of that today with his news that they're going to be opening a stock trading platform, right? Because what's hot right now, and who's a jerk? Robinhood. You know, if anything, like they could actually come in with a gut check and really screw up that platform, but not like screw it up. But that's just an opinion. But thank you, Brian, for answering questions down there. I do appreciate that, man. Okay, so let's go ahead and move on. But lastly, time frame. If I'm looking at a stock long term, I'm looking at the weekly. Usually is always where I'm going to start. I think a while back, I don't really think anybody ended up taking the swing trade with me. But it's one of those companies that I personally liked myself. It actually ended up getting hit with earnings FUD, and then just, I think, space unfortunately, it runs with space. So when space sells off, so does Maxar, and that's kind of the unfortunate thing because it's a way more well-established company than space is. I mean, they literally put out satellites for other well-established companies. So, but for example, like, you know, going out and identifying a monthly cup and handle here, or if you wanted to go out to the weekly cup and handle, I just have an idea of where the trend is, right? So at this point, and granted, this thing has now extended itself, but when I first took this position on Maxar, I saw the handle, right? Which I made money on this trade. I actually made a good bit of money on that, like, for what Maxar does. Maxar is not like, if you catch it at the right time during the right season, you'll make some good money. Usually, you just wait for the California Retirement Fund to re-enter their position, and you can go look that up. And that is usually somehow they know they're the market makers there. I don't know. But anyway, so I ended up taking a position at this bottom here, and the first place that I started was that weekly time frame, identifying a weekly cup and handle, setting my price target at my whole ribbon indicator, because my whole ribbon indicator, as much as it is a trend identifier, is also a really strong moving average as well. So I usually start with the weekly, and then move down, especially if it's a company I don't know, and then I'll move down to the daily, fine tune it on the 4, and then like trade it essentially on the hourly. So okay, yeah, we're gonna be up a little bit later than that. So that's okay. I should have brought coffee, right? All right, let me go ahead and highlight Robert D. I did teach myself how to use some indicators to enter longer term. I am new to trading. I did teach myself how to use some indicators to enter long-term plays, 30 days or so. But what should I be looking for to get into daily plays? I think once you find and establish, and I'm using Microsoft because it's just a favorite stock of mine. I like playing that stock, and when I say favorite, it's my favorite right now. I may end up saying in next week, like, month, that I can't stand Microsoft. It's my favorite right now because it makes me money, and its trend is tradable, and it shows relative strength. Once it stops doing that, I'm over it. I'm out. I'm moving on. And once it starts trading like crap, which it does, I'm out. But I'm not a very good stock companion, I can tell. Hold on, let me fix this trend. So as far as like, sorry, hold on, let me mark that for you. Okay, so for daily plays, right, I think that quantitative data, right, so even going and looking at things like Quiver Quantitative, right, where you can kind of see where money is going in and out of, and the bottom line is that these senators, House representatives, they know stuff, right? Because they make the freaking laws. They know how it's going to impact things. And so it's important. I think it's important to pay attention to certain people. Obviously, this is just some person. But as far as getting an idea of where that big money is going, Nancy Pelosi is one of my favorites, of course. I don't think I'm alone in that one. There's Tom O'Hanrahan. There's Alan. I think Alan Lowenthal. I think he had a pretty good return. He's nice and steady. There's some dude here. I don't know what his P&L dude looks like. It's awful, dude. And he lost the bag. I don't know where he's at. Stephen Knight was another guy. I liked. Yeah.
There was a guy who returned negative 14% over the past 4 years. I was like, why are you still doing this?
Yeah, I was like, did you have
messing it up?
Yeah, at this point, a Judy Chu, that was another one. Judy Chu, dude, she made the bag starting in June. Whatever she did, dude, she
Is that McConnell's wife?
Might be. Judy Chu.
Does McConnell's wife have the same last name as him?
This is why I love this thing. This is it's really cool. It's one of my favorite things. Quiver Quantitative. She's something else. I've actually met her. Whoa, that's awesome.
Yeah, she Yeah. Well,
Money.
save it for another conversation. Yeah.
uh,
No, it's Elaine Chow, whatever.
got
But
you.
yeah, I met her. I met her a while back, and apparently she knows what to trade from what I've seen online.
I'm
So,
sure, yeah.
yeah.
So I like to know, obviously, using that data there, where money is flowing. But once I have, and I know, I'm sorry, if you guys are tired of me using Microsoft, it's just such a great example, right? Look at this, right? So this is just, I'm going to simplify this. Keep it simple. You have a middle line, you have a bottom line. When it bounces off the bottom line, it's going to go to the middle line, right? If it bounces off the bottom, if it doesn't break the bottom line, it will bounce to the middle line. And that's about as kindergarten as I can make it. But that's actually how fundamental stocks like this run. And that goes for downtrends too. I watched Disney, like we would play Disney when it would bounce off of its down, and this is the thing. Disney's standard deviation channel was flipped this way. So like imagine it just in a straight downtrend. And when it would tap support, it would parabolically. You guys remember this. It would just be dumping, and then all of a sudden Disney news come out. One drop of news, and phew, up to standard deviation, linear deviation, and then back down. And it did that forever. I haven't even looked at Disney's long-term trend at this point. It's yeah, probably beyond my help. I'd have to go on TOS and look at that. Oh my god, why, dude? Look at Disney on the weekly. Ugh. Oh, I think it's gonna dump so bad. Yeah, dude, they're gonna shut down the parks or something. I don't want to say that. Let me knock on particle wood. So daily candles. One thing that you can look for, just to kind of clarify what I was talking about here. So with Microsoft, when you see a daily support bounce, right, and we'll go back down to the daily, you want to look for candles like this, right? Do you see this candle right here that from 238.50 or 238.50 all the way to 243? When you have big bounces like that, guys, that is millions of dollars going into those supports. Even here, Microsoft, look at this, and excuse my line, it's kind of doing its own thing. But even this sell, right? So you end up pushing a new low down to 242. This wick tells me a whole lot about where buyers are at. So whenever you have, and I set this level, but look at this. So whenever you see at a very obvious rejection point, and this was also a breakout point, right? So you gap up over this, so we know that it's also going to be a point in which we reject or chop and break through. So you do the very same thing when you break out after you get a solid support bounce. And obviously I used my whole ribbon indicator here because it does flip from red to green very quickly. Look at how accurate this daily, in fact, Microsoft's whole ribbon indicator is extremely reactive. You'll notice that as soon as it switches trend, the whole ribbon indicator's width starts to dissipate. So I would look for bullish candles, big bullish candles climb when a stock climbs above a major moving average, and you can include that as these EMAs. So take a look at how these EMAs behave during this chop that we see on Microsoft, and as we bounce off of support 3 times. We see that these, again, remember what I was talking about on Alcola, all 3 of my moving averages, and I just talked to you about this Atlas on the phone, all 3 of my moving averages are huddled together. It takes a lot to get a daily moving average, not just a moving average, a daily moving average, which sometimes can be so distant during their movement. Even now, the 50-day EMA is lingering at 284.75, right? I know that Microsoft will head back there relatively soon. Within the next, I would say, a month. I could be absolutely wrong. That's just my bet. Within the month, Microsoft will likely go back to those moving averages. There's a reason why that moving average is lingering. But as they are really tightly compressed, that's when I'm paying really close attention to when they get back above them, right? Because when you've fallen and they've been above you, i.e. right here, you're you're below all of these major moving averages, and I like using those moving averages as those confirmations. But once you get above them and you start to close bullishly, this is not bullishly, right? That's a neutral candle, a neutral doji. You get two. In fact, I think that's what is that? You get two neutral dojis next to each other. That's a.
Is
that
it a
tweezer
top or a bottom?
It's a top. I think it's
top. Yeah, so it's a tweezer top.
Tweezer top. So you get a little tweezer top there. And what are those this is candlestick analysis, right? Just what do those candles show you? Weakness. There's nothing there. Neutral. So you end up pulling back down and going to support. And this is during, right? It's important to understand the climate. This is why is it not showing me the date? Oh, the date is locked. Why do I have a locked date? Lock vertical. Okay. That was really, really weird. This was during May. So we actually had the Q. That's when the Qs were pulling back, right? So that's why we saw all of that movement down there. But once we climbed up above those moving averages and we saw good volume and we already had earnings passed, right? I want you guys to remember that. Like, I emphasized that for a reason, because earnings has already passed and we have already fell. And if we're not going to, if the earnings didn't ruin the company and the company is a good solid company, if it doesn't go down, it's going to go up. I don't know why. I feel like every time I say that, it's like, wow, that's too simple. But it's just kind of that simple. If Apple doesn't go down, it's going to go up. I remember looking at Apple down in this range right here. Me and Atlas, I remember back in March of this year, we looked at Apple and we had people asking us for chart requests. What do you think of Apple? And I was like, this is garbage. This is just awful. But when you look at that long-term trend, it was just it was support bounce, just like Microsoft, just like everything else. It's not always pretty. And when do people buy? When there's fear. So.
But that's when you should buy.
That's what you should buy. Now,
most people won't buy when there's fear. Most people will buy when everybody else is FOMO.
Right.
Chasing.
Yeah, they're waiting for confirmation. Right.
Yep.
All right. Thank you guys, as always, for your patience tonight. Just want to make sure that I give everybody solid feedback here. All right.
You know what's been basing really good on the daily, and I know you're gonna say really that's the stock you're gonna talk about right now.
Baba.
No, Baba doesn't. I'm in it still, but no. Clove.
Oh God. I'm just kidding. Daily
no, I mean,
I know. Oh yeah, look at it. Yeah, I see that.
It's holding nice. I mean, it's definitely got a lot of wick action at the top and the
bottom. It's squeezing. Look at the TTM.
Yeah, it's starting to
Today is the first day you didn't really get any firing, but that will likely kick back. So either you end up. See, here's the thing. I think that before the market dump, we'll see squeezes. We'll see margin calls. We'll see things start to kind of. When things start
margin calls on shorts.
Yeah. I think that some of these heavily shorted stocks that, like, dude, just as strongly, I'm going to bring my mic closer, just as strongly as people believe that these stocks are going to the moon, there's literally people who believe just as strongly they're going to zero. Or
zero. Oh yeah, 100%.
Like, and they will take short positions just as strongly as you would take an upside position. They will literally go margin and take a downside position. So
a lot of people don't ever really think about this, and maybe this will put it into perspective with some of the people that are on YouTube. Just as many people who start trading and they trade long side, so they either buy equity in hopes of it going up, or they buy option contracts in hopes of it going up. There are people who also start trading, and the first thing they learn how to do is short it. That's it. And they establish the short bias. Personally, myself, when I first started trading, it was like in 2014. And I was in a competition in college, a trading competition.
Yeah.
And it wasn't real money. It was obviously fake money because it was through the school. And I realized the first 2 or 3 weeks, I was like, man, I'm just not doing really well at all. I'm sucking. And obviously I was very new to trading at the time. And so I started shorting, and dude, I blew everybody out of the water. And for a while, that's all I wanted to do, was just short everything, because I just kept doing it really, really well. But I realized that like, I just can't go around shorting everything. It doesn't make sense. And that's where I ended up like catching myself is I would go short on something that didn't make sense to short.
Yeah.
I'm not going to short long-term Apple. That doesn't make sense.
Yeah.
Right?
It's not going to go up or down unless it's
Down.
yeah.
Exactly. So it's something to think of, and think about. Just as many new traders that enter long, there's a bunch of new traders who come in, and that's the first thing that they do or they learn about is shorting, and then that's what they essentially establish a bias from.
Yeah, and I mean, short. I think that one of the most important things that I've ever learned from any video or anybody is that like you shouldn't ever just know how to scalp or just know how to like the more versed you are in up and downside, it's like a quarterback, and I know this is probably a whack metaphor, but like when you get like those multi-talented football players, right, who can play corner or play safety and they also play quarterback, right? Those type of people are the people who are going to be able to see a play differently because they have both the offensive and the defensive perspective. So in this case, right, if you can look at a chart and know when you see weakness and start looking at something more as a predator as rather than like something that's like you want it to go up, you want it to continue it to push, you're looking at it as like, okay, I see weakness right now. And there are literally candles that are called like whale hunting stop loss candles. They are looking for your stop loss. They're literally like, I wish I had a good example, but usually the pennies are going to be the first indicate, like those ones in the morning. They're going to go hunt for your stop loss. They want to find it. Go ahead and set it. And that's why we scale into things so they can't find us, right? We're in here, in there, where are we? I'm sorry, I was thinking of an Office skit just then. But I mean that's what you're looking to accomplish. And with those, with those type of wicks or with those type of candles, usually they come at points of low volume during an uptrend, right? When they start to, or a psychological number, right? So you get like a stock runs from 5 to 10, you're damn right it's going to stop at 10. Unless it's curing cancer or Alzheimer's or something, and I mean literally that, like they have to have news that they're going to like develop a therapeutic or whatever the case may be, they're going to do something, and they run, right? That's what you're looking for. But
on that topic, man, today was really weird. There was a couple tickers that had some like FDA approvals, and I can't remember what they were off the top of my head. I traded 2 of them, and like I just didn't see the volume like come in like you normally would for an FDA, because FDA approval, like hey, that's an FDA approval. Now obviously the drug or whatever it is has to matter like to at least 1 million people. If it matters to 1 million people, then that's when like hey, it's gonna probably run. I didn't see I didn't see the normal volume come in that you normally would on FDA approval. So that was interesting today in small caps in general, but there were some small caps that still ran. But I think a lot of that has to do with all these potential short squeezes, with a lot of the money kind of being tied up in those positions for people.
That's a good question, Gold News. How do people know what barriers are? So I'm sure you're referring to resistances, correct? When you refer to barriers. Yeah, I imagine. I hear volume is the key, but where is this volume picking up? But price. But where there's volume picking up, but the price doesn't change. That is called accumulation, and that is awesome. When you don't see price correlation, but you see volume, now this can happen at the top or it can happen at the bottom. And you want to know which one is which, right? So look at here. I'm just going to use Apple here. The highest volume, right, in this section happens at a reversal and you pull back. But then right here, right as you start to look at this right here at the bottom, you get a spurt of volume that picks up, but the price action stays in range from 130 to 127, right? So you have 3 or 4 days that you stay in there, and then just a little bit of a lull, and then Apple's off to the races. And a lot of the times that's when you'll see things like the TTM squeeze, or you'll see a lot of those moving averages start to accumulate. So I think for the most part, you'll see retail selling. At the top, it'll be whales selling on retail, right? So if you have retail FOMOing into a stock, whales will dump it on them, right? And that can cause high spikes of volume, because what is volume? Volume is not the amount of people trading, because that would be ungodly if 74 million people were trading Apple in one day. But 74 million shares, right? Did my DD on FinViz. I've never used FinViz before. I'll take a look at it. But that's actually something to watch for, especially when you see a stock that is on support, and like I said, it happens at the tops and the bottoms. Whenever you hit support, you'll see a spike in volume, or the volume will start to rise, and you'll see accumulation. But at the top, and I think AMD is a good example of this, at the top, and Astro is someone who preaches this quite often, but when a stock runs parabolically, it's usually the day that has the most volume above average. That'll be the day that it reverses, the last day of the run. So, and with AMD, it was very obvious. It was literally on August 4th, and then it continued to downtrend all the way to $101, which was $1 away from my price target. But go ahead.
Whoever uses FinViz for some of their like DD, I really like that website. So I think it's a great source if you're looking for like price target upgrades for a specific company or news or float structure, to understand the float structure of a stock. Like, it gives you some pretty solid updates. The one thing that you and a lot of people I know are always looking for this information is that short interest data is not always accurate or the most up to date anywhere, because true short interest calculations only come out twice a month. The updates that are coming out like between those two updates are typically like ballparks or really good estimates. So wherever you're looking, if it's not the true update that comes through the NASDAQ or the New York Stock Exchange, then it's more than likely not accurate. 100% accurate is what I should be saying.
I don't like FinViz as the best scanner. I think that I don't think it's the best, but it's definitely one of the top websites for sure. I think.
I don't even use FinViz as a scanner. I use it literally just to look up information about the stock. Like, I've never used their scanner before. I have no idea what it's like.
I've used their scanner a few times, but I think that for an all-in-one, you can do the exact same things that you can do on FinViz, on Benzinga, and plus you have news. You know what I mean? So, I've been more impressed, I think, with Benzinga Pro as far as like a comparable Bloomberg like terminal. You know what I mean? So,
no, I mean it's a great one, man. You can't dog Benzinga. Definitely a solid scanner all in one.
I am on YouTube right now. The link is in the bio for those of you on TikTok. So if you guys are asking me any questions, I'm answering all questions on YouTube at the moment. So, all right. So let's keep it moving. So how do I specifically find entries and exit? I'm using strategy with Bollinger Band RSI. Question as a beginner, what indicator do we start with and what time frames? So what are you looking to trade? What are you looking to accomplish? If you're scalping, then you're going to have a completely different setup. If you're swing trading, you're going to also have a different setup. If you're swing trading, I think the EMAs are a pretty simple way to start. I think the 9-day moving average and VWAP are probably that volume. I don't know, what would you say, MACD? I don't even think in the beginning part you would really even need MACD. I think even a whole ribbon indicator could kind of take care of that for you.
I would say sorry, go ahead.
No, that's it.
I would say for me, the most important indicators are volume, VWAP, the 9 EMA, the 21 EMA, and then I like my simple moving averages for the daily time frame. That's about it.
Got here.
I do use the TTM and the MACD and RSI, but I could do without those. I don't necessarily I use them just to kind of confirm what I'm seeing, and like if I'm seeing some accumulation, I'm like, okay, am I seeing some true accumulation here, or are my eyes tricking me? And so I might defer to what's going on with the RSI. The RSI cool down and just trade sideways. The MACD does the same thing.
Yeah.
So that's kind of what I'll use them for.
So how do you specifically find entries and exits in a swing? Exits on entries, we just covered that. But exits, as far as an exit is concerned, you should always have a target whenever you take a swing trade. And I'll use AMD, right? So let's say that this candle ended and closed above 113.85, right? It ended green. I may wait for a pullback to this resistance or the support. Obviously, it's well respected. AMD is more than likely going to go back there. But if I was looking for a swing trade, I think like one of the more, and you can use pivot points on the daily time frame for potential targets, but target would be 122, right? Because that's where A, I have a pivot point there. B, we have a good setup right now with the inverse head and shoulders. Regardless of today's move to the downside, AMD still is maintaining a relatively good setup. Oh my God, that did not mean to do that. But whenever I'm looking for an entry, right, I have a trigger point. Like I said, that trigger point is going to be found by finding previous rejection points. So if you close and I think one thing that we've been using for a while too is as far as a daily swing or even a couple days, if you close above the 9-day moving average or VWAP with a bullish hourly candle, more than likely you're going to gap up. And that I would say that's about a 60% win rate. And I'm using, that's rough math. Like I haven't actually sat down, but just off my gut, like the amount of times that I've looked at the chart and looked at that setup in particular. I mean, I would actually probably put it higher, but I'm being a little bit modest in that. Like most of the time, if the trend is intact, you'll see a gap up off of that setup. So, Nancy, that's funny. Okay, so, but like I said, so if I decided that I was going to take the swing, I would look at previous rejection points or previous resistances. I think for Amazon, and maybe I'm going to use Amazon. So let's say that you decided to take a 2-month swing trade, or not 2-month, a contract that's about a month or two out, right? And you're looking to take a good position. This was, last week we were sitting down at 33. So you look to take a position maybe down here at the bottom, you get a bounce off of S2. The setup, right, would allot for you to potentially pick a price target that would fill the gap, right? So that the setup here would provide you with a target at most of 3,600, and that's where the earning gap gets filled. Now, of course, we discussed where it would possibly reject my price target was 3,450. I think tomorrow you will see a little bit of smoke when you get to that resistance, if you get to that resistance. But that's where you would potentially take that swing, or if you were, let's say you took this trade on Friday, right? So you took the trade on Friday, you saw, you had a nice EMA crossover that happened as well, you're holding a nice uptrend. You would set, and whether you use, and this is, let me stop really quick. This is where building your own trading plan, because you are your own person, right? That has your own personality, your own tendencies, your own feelings, your own reactions, everything, right? So what works, what you see, right? When you see something and it catches your eye, don't ignore it, right? When you see something and it catches your eye, ask about it, get confirmation. So if you see a good bottom here on Amazon bouncing off the 31.50 level, correct? And then you get a nice rebound, you stay above that hourly 200-day EMA, which, like I said, for me, as long as we climb above those bullish moving averages, I know that we have a chance, or at least the possibility of making a higher high. And so you set a price target in order to take profit, and that all depends on what you see. So if you see a setup on the daily or the weekly, maybe it takes 2 or 3 days to play out, or longer, especially if it's on the weekly. But if you only see something, a setup on the hourly, right? You see like a beautiful falling wedge on the hourly, and you're maybe sitting on a dynamics support, then perhaps that's where you bounce, and it would make for a rather good swing trade. So, okay, so today you called out Netflix, but what did you see and how did you know to look at Netflix as opposed to another stock? So that, I think, actually brings up a really good point. I just chose it. It's just what I saw. It's just what there was. I'm sure 100 different other stocks. I mean, I know that people played Affirm today. I just don't play stocks after they rip like that, right? Like, you would have got smoked if you would have taken this trade at the bell. Yeah, either way, just looking at the price action, you would have got smoked. And also knowing, I think they're priced in at $100. But for me, right, that's where there is no like, and I know what you're asking, because I think I felt that too. That, and a lot of times it comes on a losing streak. For me, I will feel that like, I don't know which one to pick, right? Because it's like, I don't want to pick wrong, or what's the right one? There is no right one. You could pick. And for new people, I highly recommend doing this, especially if you're not in the chat or you're just joining the chat. Find 4 or 5 stocks, right? If you're a long-term holder on them, even better. But find 4 or 5 stocks that have good liquidity, good movement, not speculative, possibly high growth, or like a Roku, Netflix, AMD, something in that's hot, or not even hot, but is a solid company, good financials. You don't have to worry about them pulling a Trevor Milton or something like that. You know what I mean? Like, I would never put a full size investment into GRWG, because they're a bunch of dinguses. You know what I mean? Like, they've done some pretty shady stuff in the stock market, and I'm not going to put I would never go into business with those people. And that's one of the things you should ask when you're buying a long-term business, but or a long-term trade. But so there was no like right setup for me. I think one of the things that brought it to my attention, of course, Big Stepper mentioned that he was watching Netflix. So I went and looked at it, and that's a perfect example of one. I think that Big Stepper is a great trader, but I don't care if Warren Buffett knocked my door down and told me that he was going to go full size into Apple or into JMIA tomorrow, right? I would still go look at the chart and try to set up some sort of plan. And so that being said, with Netflix, I saw that we had a good bounce off of the daily 9-day moving average. The daily setup is a massive inverse head and shoulders. Now, we can notice that Netflix, and I think we talked about this, needed to get past the 555 mark. And we did. We closed above that mark, which would, when you break past a rejection point or a barrier, if that's what your question was earlier, that barrier, and I can mark that. Let me clean this up really quick. So let's do this. So we get a nice close, right? And you can see that you start to kind of pull back once you hit that level, and you accumulate rather than rejecting like we have previous, right? So sellers are sitting there, but sellers don't have any juice. and buyers end up pushing this up and out. And so just like if I was looking for a sign of a reversal or a sign of weakness, here I see signs of strength, because when we came up to that rejection point that was right there at 554.80 and 555, we didn't just completely plummet, which we have done 1, 2, 3 times and more actually. So I know that at this point, and I pretty much nabbed the target for today, which was 567. I thought we could see, if it busted past 567, we could see solid continuation. But I've seen, with the volume that we had spike today, it is highly probable that we will see that momentum that we saw today carry on into tomorrow. And so daily setup convinced me to take the trade. Friday's close added an extra layer of icing to that. The pre-market movement, right? So the movement that we saw in pre-market, where we didn't gap down, but rather made some pretty lengthy jumps around, and then immediately at the bell, we show signs of strength, right? Pushing all the way up to 561. And those of you who traded this with me, we were red on this for about 10, 15, 20 minutes until it finally reversed and popped back up. But that's just a whole different layer of icing for me, because not only did we pull back, but we bounced back up and made an entirely new high. So 567 is where we hit. Daily time frame looks good, and I checked what I did before the end of the day. Is I went and looked at the hourly time frame, and I saw that we were sitting on the 9-day moving average, which is where we've pretty much bounced off of a good handful of time. You can see right here. On August 27th, we opened the day on the 9-day moving average. We get a nice strong bounce off of that. And so with Netflix, it looks like a good trade to me, looking back at the way that it's behaved previously, and also looking at the momentum going into the next trading day. So weird. That must be an ad. I'm sorry if there's so much. Yeah, Daniel, I feel you. I got a slightly sick one as well. She doesn't seem so sick anymore. Once I put her in bed, it brought out the fire. Okay, so I'm just trying to make sure that I don't. Best suggestion for traders that have a small account. Don't entirely rely on one thing, and I would write this down. Don't go in. If you're not doing it, great, don't start. Stop trying to make every single trade a home run hitter. If a $1,000 or a $100,000 account makes $8,000 in one day, right? Think of that as an employee that's highly experienced. He's going to get more done. He's going to do better. If you have a small account, you've got a small employee, and he's going to have to basically take what is given, right? And maximize. So I think I've said this. You need to be even more picky, right? So someone with a $100,000 account can enter a trade on one candle and take profit. Scalping, right? Weeklies, buy the opening bell, boom. You're looking to take profit within a few seconds, sometimes even, and you've made a day's wage, right? And anything past that is greed, right? You want the home run hitter. Maybe today this is where this runs. So have perspective on what you're trying to accomplish. If you have a small account and you have a job, right, which is good, think of that as just a small bonus every day. Imagine whatever you made at work, add that, just say, oh man, I made $90 today, right? 90. If somebody walked up to you and they just had $90 cash and they're like, listen, I might have 180 in real money in my back pocket. or double that or whatever the case may be. But I'll 100% give you 90 right now, and you're starving. Are you gonna try and double down? If you are, then you need to question if your first answer in your gut right there was yes, then you might want to think of this less as gambling and more as a job, something that you're looking to accomplish. You need to you set a plan, you execute the plan to gain X amount of percentage, or you see it play out, you take profit, and then as you start to build a larger account, right, you are able to your account becomes more malleable. You can start to work with your positions. You can start to enter things longer, enter things heavier, hedge yourself. But with a small account, and I think me and Manny are different in this. This is exactly why I tell people that trading is a personality, not based, but I mean the market is purely psychological. That is the number one thing. So your psychology is everything, and your execution is everything. So with a small account, only choose the most high probability plays, which requires the most amount of patience. And most people with small accounts, they struggle with a handful of things. And I can probably tell, this probably speaks to some of you here with small accounts. If you have a small account, you've probably taken a trade and not cut that trade because you knew that if you cut that trade, you were done for the day. You couldn't trade anymore because your buying power is gone. And that sucks. But that's just the way it goes. And if you really can't help yourself, paper trade. And a lot of times that I can't help yourself is sometimes misguided. I really want to learn. I really want to, I know, I want this to go up, but that feeling that you feel will be replaced the more effort that you put into education and to the psychology behind what you're doing, and being aware of yourself. So. So what Atlas just said right there, I'm going to highlight that. And Big Stepper, both of them said this. Thanks, Rich. I appreciate that. If you, so we're guilty of this. I think everybody on planet Earth that's trading anything is guilty of this. We'll say, man, go look at this stock, dude. And someone will go look at it, and somebody out there is going to buy it, even though we're looking at it with our hands on our eye, above our eyes, we're squinting, looking at something. We're like, damn, look at it go, it's too far away to actually play. But in this case, right, when you see a stock that's already ran, it's already ran, and even if it goes further, you don't have the account size to burn yourself. And if you buy the top, you are going to hate it, and more than likely you're going to hold it. And if it ends up green, now you just learned a bad lesson. You just learned a terrible lesson. You got lucky. And most people end up thinking because they got lucky that will continue to happen. And that's just not how that goes. So hopefully that is a good answer. So stay busy. Don't. This is trading is we're doing this for a reason, right? What is your why? And are you okay with not having it right now? Are you willing to work for it? Are you willing to keep pushing? Are you willing to take what is given in order to add to the cushion that you're building? Right? That's discipline. So you've got to be able to say, all right, you know what? If I exit it, and we all feel it every day. We feel FOMO every day. We go through emotional battles. But if we don't end the day red, or we don't end the day losing a majority of our account, especially if it's small, it's a good day. And we have another day to get back to the charts and look at it again. And not let what happened in that trade change the way that we do things. So even if the setup is stifled, by the market in general, right? Somebody tweets something, whatever the case may be, and the stock falls. You didn't know that. Okay, don't take it to heart. But you also should never be in any position that's going to blow your account. If I signal something, the contract's $250 and you have a $250 account, nope. You got to tell yourself nope. Because yes, that $250 contract, especially if it's a weekly, I promise you, if you any of you here have blown your accounts, I promise it was probably from weeklies. At least a majority of you guys probably had struggled with weeklies, because that is where people, and if it helps to know, 80% of weekly contracts expire worthless. So be quick. I can tell you from experience that I have taken positions 2 or 3 weeks out, and Manny's taken positions with the same strike the same week, and when he sees one red candle and he's red, I'm still green. So which is why it's important to know exactly when you're going to cut your weekly contracts. Exactly. All right. Back to questions. What's VWAP? Volume weighted average percentage, and is what that means.
Wait, what?
A VWAP. Did I say that wrong? Did I just dyslexia?
Hold on a second. My headphones are being weird. I can't even connect correctly. I don't know why. Can you hear me?
Yeah, I hear you fine. Can you hear me?
Okay. Yeah, no, so I think you might have confused it with the other
volume weighted average price. Sorry.
Yes.
Volume weighted, I lost it.
No.
Yeah.
Okay,
Yeah.
volume weighted average price.
Yeah, based on both volume and price.
Yep, exactly. It takes volume, price into account, and it uses the weight of both, and it essentially draws a trend line following the stock.
Yep, precisely. Let's see here. What else do we got? All right. What are the Qs? Daniel, the Qs are the tech ETF. So your QQQ is going to track basically most of your major tech companies. Facebook, Microsoft, Roku. I'm blanking on like 1,000 bajillion of them, but all of those stocks tend to run, or not tend to, but they move with the Qs. So
your Apple,
your
Amazon.
Yeah. Well, Apple picks and chooses, and Apple really does. It's like Apple will be like, "Oh, is SPY running? All right, I'm now in the SPY ETF." Like, the Qs are dumping. All right, I'm moving to SPY. But no, Apple's one of those ambiguous and shit. It's probably going to start running with the EV ticker in the next 10 years. Yeah. You know what? Also, let me say this. I know you guys asked a lot about entries for swing trades. If you guys notice something, a lot of the times my day trades, I end up exiting, and I end up re-entering for swing trades because I'm still day trading it, right? Just because the day ends, this trend's still intact, and I'm just looking to be able to take advantage of that trend, and I'm taking advantage of institutional money that comes in after hours and pushes the stock up. And if that's what's going to happen, then guess what? Dumb money opens the market and smart money closes it. So dumb money might get dumped on. While whales are taking profit from their swing trade, I'd like to be taking profit with them. Not only that, if I'm swinging option, and this is my I honestly, if I didn't have to scalp and I could just swing trade, wake up, go to bed, I could honestly do it, because here's the thing. If I swing a 2-week contract, who's buying my contract at the bell? Scalpers, even if they're scalping, and you do see people go into heavy size scalping next week's contract, not this week, but next week, because it still moves, right? So same thing. And if I am Monday swinging a weekly contract into Tuesday or Wednesday, then yeah, probably I'm going to be able to take advantage of that first initial pop and the idea on that contract pushes up, and then I can take profit. And I'll be honest with you guys, small accounts, that first initial pop that you get, even if it ends your day, you got to be able to walk away. And know that whenever you start to build, it's patience and not knowing, delayed gratification, right? Delayed gratification. That's if you can put off that big reward of being able to set up a spread, you'll be able to humbly accept the small gains now, because it will come. I promise. If you just keep stacking those up, ask some of our. You guys can look at the games page. Probably know what I'm talking about. There are some people in here who have figured out a system to just get the bag and leave, and they leave, and I'll hear them say it. I'm done for the day. I'm not. And they're and I love it when they do that. And please continue to like express in the chat when you're done, like, because it's a, not only you're saying it for yourself or saying it to like, hey, all right guys, I'm out, thanks. You're also confirming to yourself that you're done for the day and you're not going to keep trading. So, and that's big, because that's probably something that most people struggle with, is walking away. All right. What is a margin call? It's basically where you borrowed money and they want it back right now, and so you gotta buy the shares back that you borrowed, or pay it.
So being, and I'll break it down just a little bit
you're
more. So if you're being margin called, essentially it's because you have borrowed money from your broker, and the position that you utilize that money for is to red. Whether you're short and the stock is up a lot, so if you're short and the stock's up $10 and you went short at, I don't know, 15, and now it's at 25, so you're going to get margin called because the maintenance requirement for your short position has probably already been triggered. So that means you owe the broker money to keep your position open, or you have to close your position for a loss, and if you still owe them money, you'll have to pay them back for that. Yeah. If you get margin called on the long side, that means that you were long, either you bought equity or you bought call options, and whatever you were in with the money that you borrowed, that stock tanked. At that point, now you owe your broker money to either keep the position open, or you owe them money because you went to red. So,
very good explanation. So let me also say, backtrack really quick. For those of you with small accounts, let me tell you a formula, right? And it's not even a secret formula. It's just it's accessible to everybody. If you were the most, if you, I think you guys have joked about it. If you only accept the most exquisite volume, the finest volume on all the land, and you only wait for positive news, catalysts, whatever the case may be, right? So you PayPal today. That's news, right? That's news, and we're gonna get a push. Now, do you buy the first green cucumber? A lot of times you got to go open up the one. You got to go wait for a pullback. You got to scalp it, enter a position, because it can get out of hand real quick. You also have to know the climate of the catalyst. DKNG gets a short report, and then they get news of partnerships with ESPN, and we can go look. DKNG is one of those stocks. Look at it. Look at that. Look at the Newsweek. You shoot up.
It's disgusting.
And guess what it does? They had either planned a double top on this. I'm sorry. I'm just like, I just want to say, I think I'm allowed to say it. Fuck DKNG sometimes, man. Like, that's why I stopped playing it last year. Stopped playing it completely, and then they got that fun, and I was like, I am totally okay with this. Sorry, I just had to get that off my chest. Eventually, DKNG, I don't feel that way. I just, if they could get past the FUD and market makers stop messing with people's every breakout because I swear I watched. Look at this. Look at yo. I'm sorry. I'm not laughing. But go look at this. Let me send this. I'm gonna send this in Discord.
Dude,
Imagine.
it's the weird. It's the craziest wick
Here.
I've seen on a 5.
Let me send this to you. Look at I just sent it to you. That's the hourly. What is that? I mean, I see what it is, but how aggressive. That is so manipulative, in my opinion. Like
somebody, and literally, this is what's happening. Somebody has had a giant limit order, or it's just the market maker, right? Literally waiting for it to get to a certain point, and then they sell, and you can tell like they've just like lowered their limit order every time.
Mm-hmm.
Like, or if the market maker lowered the limit order and just kept it popped down. I mean, it's the wildest thing, man. And I mean the wick from that news candle on Friday was just stupid.
Yeah,
It was stupid.
It was, and that's why I like having Benzinga Pro because it gives me about, I'd say, 25 seconds to react before it starts really hitting the mainstream, and that's crucial time. And that's the craziest thing is like the stock, the people who traded back then, like back even 30, 40 years ago, like getting a hold of every little piece of news was like so vital. And now like it's just who can get it the fastest, like who like see it and react and like look at the like know where like your resistance is. And so like for me, like when I see a news like based, and a lot of times for me it's earnings, I want to see something happen on earnings, and I'll even play the continuation after it, or whatever the case is. But if you get solid news, and I think that like biomedical pharmaceutical news, if it is real, can be some of the most percentage friendly. It could really especially in equity, you'll see a lot of really good plays happen with that. I don't like playing like speculative pharmaceutical companies, like borderline possibly OTC one day type companies, but I do like playing companies that have the right share or the right float, and really have the volume and the sentiment and the catalyst in order to move it to the upside. So if you have a small account and you wait for earnings and you wait to see how the stock reacts, you can put yourself into a position to win with the right market conditions. So
I'll give you guys a little tip. If you see a small float, right? I consider anything below 10 million, about 15 million.
Write this
really
down,
smaller
people.
Float.
So,
anything below 15 million as a small float. 10 million is really a sweet spot. Anything below 10 is good, but anything below 15 works. If you see anything that's below 15 million as a float and institutional percentage of that float, let's say it's like 30% or 40%, right. Anything in that realm, it's got good news, wait for the pullback, get in, and then continue to scale in. If it pulls back even more, continue to scale in. But if it's got the right bio news, they got FDA approval. For example, they got a rejection notice from the FDA, and now the FDA has approved the appeal that they did. They submitted something to be patented, and it was approved. But not only was the patent approved, but their product went to market. Mm-hmm. A regular patent approval, you can trade in pre-market, fine, but you can't really, and not in this market. I don't recommend trading a patent play in this market. But if it's got these characteristics, 15 million float, really high institutional shareholder percentage, and decent news on a pullback, if you catch it, it will go. But the news has to be good. Here's one thing I'll say. If it's a phase 1, a phase 2, I could care less. I more than likely won't trade the stock. If something does well on phase 1 and phase 2, that means nothing. Because a lot of, and if I'll say this: if stocks are running in the regular trading session between 9:30 and 4 on phase 1 or phase 2 data, it's either because what they're doing is like unheard of.
Mm-hmm.
It's some kind of new magic science.
Yeah.
Or small caps are super hot. Like everything in the small cap world is running.
Right.
That's the only reason phase 1 or phase 2 news will cause a biotech to run through the trading session.
Yep.
Phase 3 will cause stuff to run if it's really good phase 3 information. And then PDUFAs, obviously FDA approvals are huge, right? Anything with an FDA approval, you can most of the time expect a good run. Today we had 2, and that's what still like blew my mind. I didn't see a ton of like, I thought some running, but I didn't see a ton of it. And that's where I was kind of like, okay, maybe a lot of money is just tied up in a lot of these short squeeze plays, and that's why the money didn't flow to the FDA approvals.
Yeah.
But it's a little tip for you guys: is 15 million float or below, high institutional percentage ownership. If you see it to where it's like minimal institutional and really high insider, be careful, because sometimes news gets released that is either been recycled. So recycled news is a very common thing in
my
small
God.
cap world.
Oh my God.
It's very common.
So much.
An article will get released a week from now, and maybe they didn't get the pop they were expecting, so they'll get somebody else to release another article about what they did, and then it'll pop because the market's hot. There's some people trading right now, and what'll happen is it'll pop, and what'll really will happen right now is that insiders, because they own such a large percentage of the float, they'll sell into that high trading volume.
Right.
And you won't be able to tell because there's so much volume. You can't tell that they're dumping into you. So that's one thing you have to be careful with stocks that have an insanely high insider ownership, and they tend to fall in that penny range and they're small caps.
Yep. I think what I have here, and I don't actually have, you can DNAY, DNA. So let's just, you guys can see my screen here. I don't want Benzinga chat. I don't want chat. So DNA since July have been starting to just like he said, get some of those articles. Right, this article right here is these 3 stocks may be reaching a bottom. Analysts say buy. They ran that article 4 times. I don't know what else to tell you. So they run that 4 times. Then Wednesday, we literally Codex DNA, a pioneer in automated benchtop synthetic biotechnology systems, today announced a licensing and supply agreement with TriLink Biotechnologies, part of the Maraveli Life Sciences, NASDAQ MRVI, for its industry-leading clean cap technology. They already have patented technology. Codex DNA will integrate the mRNA capping technology into its suite of automated mRNA synthesis kits for the BioXP system, as well as within the company's BioFoundry services offering. So what that means is I have no idea. But for the most part, the main highlighted things here is 1, working with another company. 2, they're actually working. If you go and move up here, they're actually working with the U.S. Department of Agriculture. So they're working with other well-established companies, and they are a real and profitable company that had just. And the reason why I'm giving you that is you also have a year-over-year sales. Or they just reported earnings on Tuesday. How many catalysts, right? So we get Wednesday, we get all the way back. When was this? When they ran, let's see here, Monday, July 19th. Okay. And come back here. And then up until today, right? where you start to see articles, or not today, last week, where you see articles running into earnings, right? And then earnings ends up being a beat, and you get 2.85 million, beating the 2.55 estimate. And the only thing you did lose was earnings per share, which was 1.06, with the estimate of 1.06, $1.06, down from the 82-cent estimate. So earnings wasn't enough to pull it down, so it ended up moving back up. And I did buy shares. I moved into a position of DNA, and I think, if I do recall correctly, yeah, so we're moving up in pre-market so far, still holding trend really well. I entered this on 3 different dips, so this one I have a pretty good average on, but I'm looking to ride this one up. I've got a good trailing stop loss on it, but the reason why I entered this trade is because it's getting, slowly but surely, it's starting to gather those articles, right? And then you go and look at the chart. Look at this chart. Check it out. Look at it. Oh my gosh. I'm like Gordon Ramsay for charts. It's fucking beautiful. Excuse me, hopefully there's no children watching. I apologize if there is. So even if you run it off of this low here, you guys can, I think I'm actually going to go ahead and correct that. I think this is the correct support. So yeah, so you actually have a massive falling wedge on Codex DNA, a close above the 20 EMA. I don't know. Let me send you this chart, Atlas. So with all that news, right? That's fuel. Now check out this chart and tell me that's not beautimous.
Oh, I like that, dude.
Yeah, that candle. Yeah,
that's perfect.
Yeah, that candle's good. I think I got. Even if it trades flat at this point above $13-14, I'm okay, because I think
if it breaks that support, not that support, I'm sorry, that resistance right above it there, I think you're good. You see the wicks from like a week ago, and then like the first support bounce independent. I think that like a break of that, dude, this thing is good to move up. $17 would be nice.
Yeah, if you guys are looking to get in Benzinga Pro, also remember there's a discount. I think the code should be in the link, but it's like it should be down below actually, in the video comments if you want that. So I think we need to move on to the next question. Let's see here. How do we prep for? Okay, that's a good question. We'll get that one. Can we watch you set up a watch list for tomorrow, setting up the scanner, looking at the news or whatever it is you use? I do that every single morning, so absolutely. Let's see. It's 10 o'clock. If you guys, in the next, I'll do a few more questions. If you guys want to break for water, I still got more energy. Atlas, if you want, you've helped out so much, dude. So if you gotta go, you gotta go. But I'm gonna just take a quick break. We'll keep running for around 30 more minutes, and then I'm just gonna get some water, and then yeah, we'll keep it going. So
I'll hang around for another 15 and then dip.
Okay, cool. And if you want to go to the TikTok, you can kind of see what questions are there. So what do we have? Any insight on why Zoom tanked after a good earnings? Probably their guidance.
Probably guidance.
Yeah.
I didn't get a chance to look at it, but it's probably their guidance. Their guidance was probably not that great.
I can't imagine you can guide anybody well with Zoom, but let's keep my opinions to myself. What's going on with Zoom shares? Looks like traded Monday. This is why Benzinga Pro's sick. Zoom traded lower Monday afternoon following a better expected second quarter results, but third quarter earnings guidance that might have been, damn, we're good, that might have been disappointed investors. The company reported an adjusted earnings of $1.36 per share. The figure beat the analyst consensus estimate of $1.16 per share. Sales total 1.02 billion, better than the 991 million estimate expected by analysts. Sales were up about 58% year-over-year basis. In Q2, we achieved our first billion-dollar revenue quarter, which while delivering strong profitability and cash flow. The Zoom founder said Q2 was also marked by several milestones on our expansion beyond the UC platform. We've launched Zoom apps, bringing you over 50 apps directly into the Zoom experience and Zoom events and an all-in-one digital event service. Now, today that the rest of this is just kind of a humbo jumbo, but it says Zoom expects third quarter earnings to be about $1.07 and $1.08 per share, below the analyst consensus around $1.09. Next quarter sales expected to be in the range of 1.05 billion and basically the same, no rate of change. Analysts expect quarterly sales around 1.1 billion. So that looks like the earnings per share. The company sees a fiscal year 2020 earnings per share of the earnings per share for the fiscal year of 2021, $4.75 and $4.79 on sales of 4.005 billion and 4.015 billion. Analysts expect. So yeah, there you go. Whew. Also, did anybody grab $300 puts with me? Yuck.
Oh, you took Zoom short?
Yeah. Me and Austin.
Bro.
I said it.
Nice. No,
Yeah.
well, I haven't been able to
okay. Yeah, where are we at? Let me go look. What are we in? Oh my god. Oh my gosh.
305.
Oh my gosh. I love
What was the premium on those?
Oh my gosh, I have it. Hold on. Hold on 1 second.
Dude, IV is gonna be nuts.
I'm gonna be jacked to the. I'm gonna be. Never mind. I can't say that on.
IV is going to be absolutely insane on those.
Yeah. Wow.
I think on those, man, at the open, I honestly would just take profit.
Oh yeah, I think it's gonna bounce so hard. Yeah.
Yeah.
I just like had an Irish accent for like 2 seconds. That was weird. I'm getting tired. Okay, fine. Do what you want. Switch to what? Trade station? I don't know. Just close this thing. Sorry guys, hold on 1 second. Now I just tried to open up Trade Station to tell you my fill, and it's just freaking my computer out. Alright, calm down, jeez. Okay, there we go. We good now? No? Sorry, I wanna give you my fill on Zoom. Did anybody else take those? Anybody else in the Discord? I told y'all I took Zoom puts. I don't earnings gamble all the time, but when I do, it's usually Pinterest and Zoom. No shit. But those are gonna be two of probably my biggest earnings plays this quarter. Pinterest was that was ridiculous. All right, here we go. I'm in. Oh. All right. 1 second. Sorry, it's taking a while, guys. Option station. There we go. Positions. Oh my gosh. Hello? Can I get my option pro? Or my Okay, dude, I don't know why, but like this is just not loading. Hold on 1 second. Oh, there we go. Okay. Wow, that took forever. I think I got filled at 86 cents.
$86?
Cents.
86 like US like
Yeah.
Yeah. I was like, how'd you get a contract for under $1?
Yeah.
But no, I seriously, dude, those are gonna be up at least 500%.
I got another one for, I bought one for 100 as well. So, all right, sorry guys. Red Bull and coffee. That's funny. Okay, so what other questions do we have? Do you see what does your scanner setup look like for tomorrow and why? My scanner setup looks exactly the same every day. I just use it I use the day high series, 52 week and day high, halts and resumes. I most of the time have price spikes on that as well. I then have the flip option activity, lows, and a lot of times opening gaps and such. Okay. Opening gaps and all that good stuff, and that'll kind of give me, like, when I see 5 consecutive new highs, that'll give me an indication that not only does the stock have good volume or good momentum, but it's continuing to make new highs. Oh my god, I just lost my left hemisphere. Oh. Wow, that one really spun me around. Okay. Excuse me, guys. I just shifted realities and everything. Okay. Where are we at? All right. For those who can't be doing multiple entries and exits, how do we prep for swing trades? I think that's a great question. So for a swing trade, let's say normally you're going to want to enter, with a small account, you really want to avoid the volatility. You just want the price action. You just want you want people to buy your contract at the bell and sell it to them, right? That's who you are. You when you have that type of setup, you've got to get rid of it. And this is the thing. This is the reason why, because at the bell, a lot of people are going to be waiting 15 minutes. They're not going to maybe they take that first initial boom right at the bell. They take that first 5-minute candle, first 1-minute candle, and they take it on the initial pop, right? That's a lot of the times, like Microsoft, right? Microsoft was a good example. Let's look at Microsoft on the hourly, okay? Why did we take this swing trade? This is probably a great swing trade. This was a great swing trade for small accounts. And Microsoft does quite often, present the opportunity for small account swing trades. So Optasy likely saw the same thing because me and Optasy both took the same trade. But with Microsoft, right, I noticed that it hit my price target it actually broke my price target of 305. I've had the price target of 305 for months now. Feels like months. Hold on. June 6th is when I put the first $300 price target. So a little bit of an exaggeration, but right around there. So with Microsoft, right, and even looking at Microsoft now, it presents a pretty good potential swing trade. So what I saw was I knew, and again, this is stuff that is discussed and takes a minute to look at. So for somebody new looking at Microsoft, you would have to go establish and say, where are we in the grand scheme of things? And I think that that's what the standard deviation channel provides. It provides you the opportunity to see the longer term trends. So with that being said, when you see those longer term trends, it's good to study what happens at support, at resistance. So what do I see happens? I'm going to go back, right? So looking here at Microsoft, we hit the 231 level and then we pull back. And then we go right back up and we hit the 233 level before we finally pull back, right? Now, this is pretty much cyclical for every resistance. So you hit a resistance here, it rejects, it starts to lose strength. It actually goes and retests the same level it breaks, it pulls back. And so what I was looking for here, I think you can see that price action here on the linear deviation line as well. But what I was looking for here, right, was the same thing. I knew that we were going to pull back, but if it was going to pull back and be bad, it was going to look like this. That is a reversal. Okay? Look at this candle. That is a reversal. That is a pullback. Why? Because in 3 candles, right, you make a move from 288 into the 297, right? That's a big move for Microsoft. That's a good, strong move. Now, these 3 candles, you open up at 305 and you close at 302. That's not strength. You open up the next daily candle, you open at 304, you close at 301. That's not a strong move. You go and you hit my price target that I gave you guys for the pullback that I was watching for to the 9-day moving average, where 296. Where do you hit? 296.50, and you bounce. Why? Because there was a small gap there. So once that gap gets filled, I was looking for the bounce, and this was discussed in post market, because it has the strength, because retail doesn't likely see the same channel that we do, right? Because not everybody and their mother is using the standard deviation channel. A lot of people are just using price action. A lot of people are just using volume. A lot of people subjugate themselves to one style of analysis. In my opinion, when I see setup like this and I go down to the hourly to verify whether it looks good, this is a controlled pullback, right? Now, what is this candle here? This candle shows me that my price target of 296 for a pullback, which was perfectly lined up. I actually used my 200-day EMA to give you guys that price target, because I noticed that when it hits the 200, right, and this is all DD, what you guys should be hearing from me right now is I've done my due diligence. Like, even though I'm saying things, that's what I'm really saying. Like, I've gone back and I've looked at how things have behaved, and I use certain tools like the EMAs in order to, that I have found, right, respect or show respect, and now I'm utilizing those moving averages for exactly what they're used for potential pullbacks, for bounces. And what is the 200-day EMA? That's going to be stronger. Why is it going to be stronger? Because it's 200 days of data. Now, we're on the hourly, so the data changes, but regardless, the sentiment stays the same. And because I drew this channel, right? Channel looks pretty sexy. Sound like opposite right now, but it looks pretty damn good. That's a beautiful channel there, right? And you're trading down. You're controlled. You're not rejecting with vigor. You're not losing, like, you're not making these type of wicks, right? You're not completely parabolically moving to the downside. You're not seeing major shorts or rejections like happened here at what happened here at 291.50, where you pull back, and you stay down. You get a nice tapering, slow pullback, and then when you finally hit that price target, you bounce, and you bounce really, really well, climb up, get that EMA crossover, and the rest is history. So, and for Microsoft, an hourly flag is enough for me to take a short-term swing trade. An hourly flag, an hourly setup period is good for a short-term swing trade if you've gone and paid close attention. And I think that Microsoft goes again tomorrow. I really do. I think Microsoft goes to 305 tomorrow. That's my price target for tomorrow. You heard it first. Probably not. Somebody probably already said it between now and then. But that's what I look for. And because we got the strong bounce, a small account, right, would see that we're closing the day tight up against resistance. And granted, you could wait till pre-market, but one of the things I warned people was a potential gap fill. But because we were already in the trade, it was a break of pre-market lows or a break of pre-market highs. And that's the trigger that I was waiting for in order to cut or trim. So if you can't take multiple entries, you want to take a swing trade that's going to require less effort, right? You either open and you cut, or you open, you let it ride, and you cut, right? That's simple. Simplify it for yourself so you don't have to hedge yourself and do all this. You take a position, you know what your target price is, and you take the profit, and you just continue to do that. Give it 2 weeks, and your account's going to look totally different, and you can start to maybe, depending on the size, toy around with it. What do I consider a small account? Probably anything under 15K is a relatively small. I don't know. Maybe a small account could be 500 to 10K. It depends on. Nah, that's what I would.
I would agree with you. Anything under Okay, really anything under
Yeah.
so like at that point it becomes tougher to trade either even if you're doing options or equity because you have to have a cash account, limiting yourself to how many things you can trade a day.
Yes. Yes. Exactly. Yeah. We're on YouTube live. Um, and those of you who are watching and stuff, like or just tuning in, feel free to scroll back and kind of look at the questions that come in, and any of the ones that kind of catch your interest. So, what's up, Shinobi? Sorry, I'm looking at reading your questions. Yeah, AMD is a garbage poo-poo stock whenever they decide we don't want to let it go up. I need to find out if anybody swung Zoom with me. I'm pretty sure Austin did. Because Austin takes my YOLOs. Did anybody else take Zoom? I know it's got to be.
I can guarantee you Austin swung. I wasn't even on live. I can guarantee you Austin took that trade.
Probably. When you're waiting for something to pull back to the 9 EMA, is that on a smaller time frame or a larger time frame? If the one time frame fails me, the next one, right? So if let's say what's a good, I'm gonna just fucking use Microsoft again. So here on the hourly, right? This morning, I knew, for me, I think the 9-day moving average and the hourly are best friends. They're like that's probably like one of my top, like, and it goes stock by stock. But in this case, look at Microsoft. The 9-day moving average opens up, and I think if you guys come look here, I'll show it just so you guys know. I don't know what that is. So let's go to my profile. I just want to show you guys because I posted it this morning. So look at this. This is Microsoft. Now look at where the 9-day moving average is, right? I'm waiting for the stock to test that 9 for a pop. And that's where I'm looking to take the stock to the upside. So, Discord? What about Discord? I'm not in Discord at the moment, no. Yes, Zoom will more than likely bounce. Yes. I guarantee it bounces at some point. Yeah.
For sure.
So, this kid, he's in our YouTube. Where'd he go? He asked us about... I'm about to fry him. Excuse my language, everybody. Not Ernesto. Not you, dude. This guy. Yeah, he's asking me questions so he can... I don't know what his MO is. He's just a weird guy.
Just kick him out of the chat
Or
or the live stream.
Oh, I can't see if he's I can't see if he's in here.
What was his name?
Hold on. Yeah. Nothing. It's on TikTok now. Never mind.
Okay.
I'm not even gonna answer that question. You don't deserve it. Do you head most of your option trades, and what is your philosophy on how to do this successfully? So most of my long swings, right? So if Snapchat, right? I'm still in downside positions on Snapchat. I'm probably not going to cut those. I might roll them out, but more than likely, looking at Snapchat, if it breaks the trigger point to the upside, oops. Right, and this is, I think I have it pretty well mapped out. Yeah, so we actually, Snapchat actually broke downtrend and into the day with a flag. Preferable, not preferable as far as what we would like to see as far as price action is concerned, but seeing the bounce off of $71 made a whole lot of sense, and that happened today. So with Snapchat, in my opinion, right, because I'm long short on it, I'll take it up to $75, right? 75.81. That's a big target for it, and I'll use weeklies to do it, and that's not a big move, but I'll scalp that move to the upside. And I think that at the moment right now that, like, even if you just line this up, right? So if I have this as a price target for Snap, just that previous high right around $78, I'll take this because we got a strong bounce off of this whole ribbon indicator. I'll take this to the upside, right? And I'll take it to $78. Now, there's a couple different things because I didn't enter a position that cost me a ton, and I didn't enter heavy. It's more malleable. I could size into the upside heavier if the volume presents itself, and then at the rejection point of $28, and I mean, I guess all the way to 80, but I would just say that's 28, $78, 78 to 79, that little zone there. If we broke above that, then at that point I would be in an upside position if I was out long short, right? Now, more than likely we are going to bounce back up to that resistance. Now, do we continue? That's the question. And a lot of stocks are at major pivotal points like this. So, yes, there is news on Apple. Yes, they are planning on integrating satellite technology into their phones. So,
for anybody who traded GSAT off that news, GSAT is not a guaranteed partner. That is just one of the companies that does produce that tech, and so, like, that's why it was being traded, and that's the company that a lot of people defaulted to, saying like, hey, this is more than likely going to be them, or that's just where all of retail went. That does not guarantee that they partner with them.
Yeah. We're on YouTube Live right now, but how did I become a partner on TradingView? I just signed up I just emailed them. I've talked to the people who own TradingView a couple of times, and they like some of my ideas and stuff like that on TradingView. So I think they have an affiliate program for anybody, but all right, guys. Ernesto, I will answer Disney for you, though.
It looks to me like it's in the middle of a daily range, bro.
Disney, look at the weekly, dude. That's a
weekly.
Yeah, this is either. So I have it.
Oh God, that's.
So I mean, but that's
tightly wound.
Well, let me send this to you, and this is where things could get parabolic, and I don't know if that's going to end up happening, right?
It's got to break the top of the triangle, coming down from that all-time high.
Well, you have it. Yeah. So let me. Do you see? Are you looking at my stream? I don't think you can see it.
No, I'm not. I can't.
Here, this is the weekly trend right here. That's the weekly trend.
Yeah. Mm-hmm.
So, in all honesty, like, it almost seems like they're delaying it, right? Like, stocks that can't, like, you're not going to get any more pushes to the upside unless it happens. And you've already seen spikes off of support up to 187, which is that resistance. So the resistance on Disney is 185. If 185 gets broken, and then you can make a higher high above 188.60. That's the technical trigger for me to take Disney for a trip back up to all-time highs. But we're also dealing with shutdowns, hesitant shutdowns, more mass mandates. So
I'll say this fundamentally, up until
and I don't know how much revenue Disney Plus generates. I'd have to go look at the numbers. But up until like Disney Plus was a product, 75% of Disney's revenue is made from the parks and the hotels, not movies.
Yeah.
If you thought that, that's not correct, because the cost to those movies is insane.
The movies are almost advertisements for the rest of their shit.
Exactly. So they make money off of the parks, and they make money off of merchandise that is sold because of the movie.
Mm-hmm.
So don't think that the movies are a cash cow for them. They're not. They're, if anything, they're a actual bleed. That's what bleeds them sometimes, is their movies.
Yeah. Scarlett Johansson's suing them right now as well, so.
Nice.
All right. Yeah, Daniel, I was actually about to hit that one for you. I see your. What is that? Is that That is BlackBerry. Okay, let's do BlackBerry real quick. All right. I'm about to be done here in 2 minutes. So dynamic support is here. Will you pull up BlackBerry? Tell me what you think as well.
Yeah, give me a second.
I think this one is one of those stocks that just continues to pump off of memes.
Yeah, BlackBerry. It's not the chart. The chart on the daily looks like it's some. You know what it reminds me of, bro? Go look at Boeing back in March.
Yeah.
Where it makes those high tops, comes back and retraces, and then makes another high top.
Yeah.
And then comes back and it's literally just the same pattern over and over.
And you know what that is? Well, I with Boeing it breaks out of it, but with these, it's like this is like the first signs of blood. If that makes any sense, with BlackBerry, BlackBerry used to trade in the $145 range. $145 range. I'm sure back when it was the hottest shit ever, January of 2007. Everybody had I don't even know how people type on those things. But right now, BlackBerry has lost its social sentiment, right? I don't even know what they do anymore. They might as well start selling BlackBerries.
They do something with they do something with data and
it's 5G and data and stuff like that.
But it's not. They don't make a ton of money, dude.
No, yeah,
I think they're just getting by.
Yeah, and so I think until and don't sleep on it, right? So what could happen? I think when I see setups like this, the main thing that comes to mind is that it's an easy target for shorts, and you can tell retail pumps it up, shorts take it back down, it goes back down to that dynamic support, and the cycle starts all over again, except smaller because they're burning people out. Now, this one, right, you end up getting, I would say 50% of the previous move. So $15 if you end up spiking with the next AMC craziness, if it happens. But that's only if that happens. Now, at this point, it's probably more important to not do technical analysis, but do fundamental. Because when the chart looks like this and your stock has fallen from $145 and now it's only brought up as a potential meme stock, that's when BlackBerry, you have to go look at the paper and the white sheets and do whether you're doing a DCF or you're just looking at other analyst evaluation. You need to find out what that share, what it should be worth, what it's worth, what it could potentially, what are they working on, what are they doing, what news are they putting out? Because honestly, BlackBerry still has that OG sentiment, and if I was running BlackBerry, I personally would probably partner with somebody or something that is innovative at the moment. They need to get somebody who's into innovation because they still have the name, and I'm sure with the right acquisitions, they could potentially turn that company around. It still has the juice. If I would buy BlackBerry, buy the company. I would literally buy the company if I had $1 bajillion. I'd buy it and I'd probably throw some like Steve Jobs like dudes in there and be like, turn it into something cool. Make the phones spit out Blackberries.
Yeah, make it into something that would be innovative for, you know, the time that we're in. The
Yeah.
one thing that I will say about BlackBerry is, like, especially in a company like this, so obviously if you like the stock and you're like, hey, like or if you're bag holding, right, which sucks because I know a lot of people are, like, to me, if a short squeeze goes against me, I'm out. I don't hold.
No.
There's no
Technicals.
freaking way. I am out. I don't play that game. I'm not going to sit 20 grand. I'm not going to put 20 grand into a play that's a short squeeze. And if I'm down 10% on it, I'm just not going to hold. No, forget it. Not happening.
Yeah.
Like, I'm going to close out of my position and I'm done.
Yeah.
And I'm going to hedge myself. So, like, if you're bag holding, which I know a lot of people are because I do see it on Reddit and I do see it on Twitter, your best bet, number one, is to understand what the management team is like. Are they going to do a share offering into every big pop? Because if they do, then you're going to want to get out when there's a big pop. So you're gonna kind of have to see their history of like how they manage the company and what they do with share offerings. Number two, what Garrett said about like them partnering or having a deal. If there's rumors that a deal is around the corner, or if there's rumors that they're partnering with somebody who's innovative, then that will be your chance to either ride it up until that potential rumor is about to come out, or when that potential rumor comes out or that news comes out, you know, it's no longer a rumor, you sell before people end up selling, you know, the bulk of their shares the next day. Because typically some of that news comes out in after hours or pre-market. So that's kind of the situation you're in with something like this. Now, like, it looks like it's, you know, primed for another pop. To me, 1450 is probably your max. If you break that, you're technically breaking out of this like long-term triangle that we have on it. But I just, it's gotta have like some crazy retail interest behind it, because institutions aren't buying this thing up. And one thing I'll say about the whole entire like short squeeze thing, guys, and I know some people are like very big on like, hey, AMC, GME, like this is what we're gonna trade, this is what we're gonna talk about, like I'm holding forever. That's fine. I'm cool. Like it doesn't bother me. I'm indifferent about it. But the one thing that I'll have to say is that if you think retail is the only group of traders that dropped GME to $300 and something at one point, that took AMC to 77 at one point, you're fooling yourself.
And straight up,
be honest.
Straight up, 100%. I really believe that they started spitting out every highly shorted company and exiting position. I think that they started. Why did they? Dude, we had silver. Who in their right mind would ever?
You can't
squeeze silver. You can't. You can't. Like what? Like, you know who owns that? You
cannot
can't.
squeeze silver. That doesn't make any sense.
It would take every person in America to dump like at least half of their net worth, like every single like average working everyday person, to dump they would literally have to blow the stock market up. Like
the amount of money you would need to utilize to squeeze, so it just doesn't. So here's the thing. What I'm getting at is that like it's other hedge funds, other institutions that are playing the long game. Remember, hedge funds don't like each other. Majority of the time, they hate each other.
Yep.
Okay, they might be cool when it comes to meetings and going to presentations and things like that, and they have idea dinners. That stuff happens, but at the end of the day, here's a great example of one.
Of course.
What's his name? What's the guy who created PSTH?
Bill Ackman.
Ackman. So Ackman was short on what's that shit company that makes like herbs and Herbalife, I think.
Herbalife, that's the piece of
Herbalife.
shit company.
Yeah. So he was short. He came out publicly. This was years ago. He came out publicly and said, "I'm short Herbalife." So a bunch of hedge funds got together and said, "We're going to squeeze you." They obviously didn't tell him that. and
Yeah.
they took the thing and they squeezed the shit out of it.
Yep.
Like, they do that.
Yep.
It's just how it works. So don't, like, that's one thing I'm just trying to put in people's heads is that don't think all that volume is strictly just retail. It's not.
And also, the more institutions are in the same position upside that you are, the worse it is for you, because guess what? They'll wait for that momentum to really get going. You're getting really excited. You're ready to buy. Dump it. And that's what they do, is they grab it underneath with you, right? They get that. They get you. It's like you'll see it, right? You'll all out of nowhere. It just like shoots up, right? And it's like literally they get it going, and then retail just FOMOs into it. Go ahead.
Here's the one thing I'll say. If my chart will load, I don't know why it's frozen. I have nowhere now. If you look at GME at peak, the thing was trading like some ungodly amount of shares. I'm trying to get my chart to load. It's freezing up for some reason. But it traded an ungodly amount of shares at its peak. And actually here, it just loaded. And this will say something about what was happening. So at peak, the volume on GME was, let's see.
Yeah, so Daniel,
50,
you're good.
50, no, God, it was 178 million. Okay, that's peak volume, 178 million. Dude, if you look at that chart, and you look at that amount of volume, somebody was selling into that, and somebody was selling a lot into that. It wasn't retail.
Mm-hmm.
The retail was selling some, but the reason I say is look how much it gapped up, and typically after it gapped up, you would see a little bit pop, and then it would just be pure dump it. I mean, it was a strong sell-off. Somebody was selling paper into that. I guarantee you, eventually it will come out, and we will know that somebody was just selling paper like crazy. And it was either somebody who had acquired shares as an insider over time, and then they still held their shares and left the company, or somebody who had the shares as an insider and then decided to gift them to someone else, aka gift, and they're sitting overseas and dumping those shares into the market. That shit happens all the time.
So one last thing, if you have a good average, right, 577, then at this point, all of this is happening in the clouds above you. So as long as it stays in the sky, it's up to you on whether you want to take profit and ride that wave. We're more or less referring to people looking to get in at these levels. We would need to see, like, for me, my trigger on GameStop is 230. If it goes to 230, it goes to 250, period. End of story. For me, anyway. With AMC, and this is one of the points that I was trying to make, or that I'm trying to make, is that as long as retail stays spread out, looking for a new stock to squeeze every other day, nothing will get done. I don't know if it's just the times, or maybe I need to learn more about humans. I mean, I mean, in my inclinations that they probably wouldn't, but you would literally have to get, and people already argue about which one should be squeezed. That GameStop's already had its squeeze, and that AMC should be squeezed. Why are you guys still playing GameStop, right? And now that there's confusion, there's room for muddying of waters. I'll put it that way. You start to dilute the focus, and people are like, fucking, I should have got an AMC at when. I mean, shit. I called AMC at $12. $12. I said it's going and at that point for $12 to $60. That was a pretty fat price target. That's probably one of my largest price target, and I have that right here. Just anybody doubting me, that's literally right there. game breakout finally will PS5 history repeat itself on November 23rd, and the price was trading at $12.71. Yuck.
Oh, you're talking about game, not AMC, right?
Game, yeah. AMC was that was not me.
I was about to say, hey man, I called AMC.
Yeah. No. I had no part in the AMC thing. I game was my shit. I loved game.
No, you rode that thing, dude. I'm mad I got out at 40.
Oh, trust me too. I mean, you can't. I had 1,000% option play, and it would have been a like 120,000% play or some shit. You know, how do you prepare for that fucking type of shit? You don't know. You can't. You can only, like anybody who held all the way probably did so because they didn't know any better. So
there's no risk management at that point.
Yeah, or you have a runner that you're literally like, I made a lot of
free.
money and it's free. So
yeah.
All right. Well, that concludes tonight's business. Hopefully, we were able to get to all of your guys' questions. This is a bit more advanced as far as trends, stuff like that. What I'm going to be doing is I'm going to be doing a more of a newbie day. So we might just hold this strictly in the Discord. And this is all, I might just even pre-plan this so that way, you guys have an idea of when it's coming. But as far as like the questions or things that we'll be covering, I may just pre-plan it or ask some questions as far as like a poll of what you guys are potentially thinking. And of course, if you thoughts on Polygon Matic, I'm not that guy. I like
Matic.
I like the chart, and I have a little Matic that I bought, but I didn't buy it because I knew what it was. Dead ass. I mean, I don't know why one crypto is more important than the other. I'm not that guy. I can chart it. I called the Bitcoin top. I as far as I know, you buy weird shit on the internet with Bitcoin. That's all I know. No, just kidding. I'm just fucking. Of course, yeah. Thank you guys for hanging out, chilling. I appreciate it, you guys. Of course, as always, thank you for leaving likes. If you guys left a tip, I appreciate that as well. Those are always noticed and appreciated. Those of you who are viewing this later, feel free to ask questions. Remember that this is the way to learn. Courses, I want you to think back, and I'm ending this with this statement. I want you to think back in school when you were handed worksheets. And I want you to remember how inspired you felt by your homework notebook full of worksheets. And if you felt inspired, I would like to specifically talk to you about what you were doing in high school that was what drugs, or I'm just kidding. But no, I mean, like if your methodical, very boring homework was interesting to you and you felt that and I think that I'm not alone and a lot of people believing that, obviously I'm not going to debate our education system, but a lot of the things that happen nowadays in education is very like workbook related, right? That's one of the reasons why I don't like courses, because we're humans. We're not robots. You can't give us a sheet. There are some individuals, right, that just you hand them something, they read it, and they can go about their way. We're all different. But I've noticed that the vast majority of us, as humans do, learn better through some type of human connection, speaking, looking at that person's face. Vast majority of human language is delivered through body language. And with that being said, being able to see me, being able to see my mannerisms, being able to see how I emphasize certain things over others, gives you an idea of my perspective and what I prioritize on, rather than what you just see written down, where I can only maybe embolden something or highlight it, but you have to have multiple different emboldens to give one thing more emphasis than the other. So just at the end of the day, ask questions when these opportunities, and we'll keep continuing to innovate here and move Simple Stacks into new directions as far as podcast and Q&As like we did tonight, and specific subject Q&As. So but
even OnlyFans, just kidding.
yeah, there we go. Face to face, no social distance for me, buddy. Oh God, I'm hands on. Oh geez, Daniel. Whew, what? Oh man, I need that human interaction. Oh, buddy. All right, Daniel.
All right, guys. Well, I gotta jump off. Have a great night.
Yeah,
and I'll see y'all sometime next week. Take care.
Awesome. Yeah, thank you guys so much. Appreciate you guys. We'll catch you in the next one. You guys are awesome. See you tomorrow morning, 8:15, 8:25. All here on YouTube. If you guys aren't in the Discord, watch on Twitter. All right, guys. Peace. All right, we're done.